Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. All right, back in the office, traveling. Been traveling like crazy. Anybody out there that has a senior in high school who is trying to decide where they want to go to college. I feel you. Okay? So, back on the desk, and what I would say about yesterday, and what I would say about this chart, is that it has undergone technical damage, okay? It's doing the things that we sit in here every day and say, okay, if the bears want to be successful, they need to do the following. And they usually just never do it. So it's like, okay, well, that was dumb, and back up we go. So what's been happening? They've sealed off the blue line, which is your 9-day. They started sealing off the 20-day. And remember, things that want to trade between the middle Bollinger Band and the upper Bollinger Band, the baseline assumption there is that those are buy the dips markets. Things, and when I say things, I mean anything. We could be talking about a stock. We could be talking about the S&P 500 index. We could be talking about a commodity. On a chart, things that want to trade between the middle band and the lower band are sell rallies markets. So the last couple of days, Friday and yesterday, you had a lift that just got murdered to lower lows, and we started engaging the lower Bollinger Band, and we're on a lower Bollinger Band ride. Day 5. Now, see this gray line? We don't get a chance to talk about that much. That's the third standard deviation Bollinger Band, okay? So price out to 3 standard deviations tends to stay between this gray line and this gray line. Well, we touched it yesterday, and I can't really remember the last time we touched the third standard deviation band, but I mean, we used to do it during COVID all the time, but this is the first one, certainly of 2024. They held it there, bounced it a little bit there, and now we have a chance to talk about something that I hardly ever get a chance to talk about, which is what I coined as the channel. Okay? What is the channel? The channel is this space of price between the 3rd standard deviation band and the 2 standard deviation band. Okay? And it applies the same whether we were talking about up here or down here. Okay? Once price engages this 3rd standard deviation band, for at least a day, the 2nd standard deviation band acts as resistance and keeps the price inside of what we call the channel. Okay, or what? Not we, me. So lower band is about 51.25. Globex high right now is about 51.20. So as we get into today, what the bulls are going to need to do is try to get price back in between the bands. It's not there. And, you know, they took it down as low as, you know, it's been down to 50.88. What's the low? 81 quarter. Okay, so they just lifted it from 6:30 in the morning up to about 51.20, 8 o'clock. It's 8:30 as I'm doing this. They've brought it back in to the hourly mid-band. But the key is, can the bulls get out of here? Okay? Please don't sit around and expect that you're going to get a 3rd standard deviation lower band ride. Okay? Because unless something really, really hairy happens, that's not going to happen. And what tends to happen to people and traders that are predominantly bullish, or that predominantly that are predominantly bearish, or that throw bearish opinions around all the time. Yesterday was like Christmas and their birthday all wrapped up into one. And it feels great. And look, it's fun to trade. There's handles all over the place, which is great, especially when I'm traveling around and don't have time to stare at the market every 5 seconds. And I know yesterday felt really good, perma-bear guy. But the problem, almost always in this situation, is they want this feeling to continue. They want to feel this every day. And who wouldn't want to feel Wile E. Coyote off a cliff with a rocket strapped to his back straight down every day? Okay? The elevator shaft is awesome. Okay? The elevator shaft tends to go on for a little bit, but eventually it gets overextended. Everybody gets out over the tips of their skis, and then they bounce it. Okay? I'm not saying that you can't be short or you shouldn't be short. It's fine. But when they start to bounce it, recognize it for what it is and try not to get murdered. Okay? That would be best. Because you've got two big down days here. Okay? And as it presses down in here, if it gets back inside the bands, it's going to want to reach for the 50. And I think you got to let it. And when these face rippers come, you can be long, you can stand aside, but you can't fight them short. Okay? So, bears, you've had your fun down here. It'll be more fun if you let them lift it and then, sell that lower high. And like I said, anything that wants to exist between the middle band and the lower band is a sell rallies market. You can't sell a rally without a rally. You can't sell a rally without a rally. The problem is when people get murdered on these tapes is they forget about the rally part and they think it's just going to go straight down forever. And so it'll lift like 8 handles. No, hit it. No, let it work out. Let it work out. Be long, stand aside. Don't fight it short. Sell the rally, but let the rally develop. Let the rally develop. There's more than enough volatility, more than enough handles to capture on this stuff. All right, hourly chart real quick here. Okay, where is it? Found it. Okay, so your new weekly pivot is 5,200 half. Obviously, that's the roundy. It's also locked up with the 9-day. The 9-day held really nicely yesterday. They never even got the middle band involved. That was Friday's failure up there at the 50 and the 20. I mean, they were all stacked up and they killed it. Sealed off the 9-day. It was a beauty. 50.81 quarter, like I said, is the low. See if this hourly mid-band goes support. That's going to be the ticket to the bigger rally, and then you'll have to see how price wants to handle that. If the bears can break the low today, then they have a chance to stretch their legs down in that 50-50 area. 5050 for a look. So you got volume weighted average price and proprietary moving average sitting at 5,100. Okay, you've got a big chunk up here at 5,200. You got the 50 underneath. So I'm not looking for a massive rally today, but I am looking for a little bit of a relief rally that you're going to have to be patient with if you want to sell it for a lower low. You got to let it develop. Don't fight it, because if you fight it, then you're going to be out of money and out of brain cells by the time the moment comes where you actually need to execute and sell it. Okay? All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.